rate cuts has officially been canceled for the entire year, and it's not even a part of the discussion. In fact, they're even talking about increasing rates. What happened? What the hell happened, and why has it come down to this? Well, it's because of the war. Let's just be honest. It's all because of this war with Iran. If you go back a little bit, back in January, back when things were actually going pretty decent when it comes to the path of interest rates. Do you remember back in December leading into January, the job market was doing horrible, but the good thing is that inflation was actually trickling down. It was getting closer and closer to the 2% goal with the Federal Reserve, and it went as low as 2.3 to 2.4%. So when the war happened at late January, early February, oil went up and then inflation went up right with it. So what exactly is happening with the stock market? It's very unpredictable at the moment, and nothing makes sense. Nothing makes sense. I've lost all motivation to post videos because everything I learned is out the window. Everything I learned is out the window. And now it's all about what someone is tweeting. Now the stock market is literally all dependent on what the president is tweeting about. So forget about all this data. What's this guy posting? That's what the stock market has came down to. They don't want to talk about how inflation's been rampant. Yeah, this last inflation data, it beat expectations of 3.8% to now it's only 3.6%. What a difference. And it's only happened because the war was over for a few weeks. So that means the oil came down, which eased inflation. But now that the war's back on, oil went back up. And now it's going to affect the future inflation data, of course. And not only that, if you didn't see what happened at the last Federal Reserve meeting with Kevin Warsh for his first time, he came out talking about how he wants to change the way that they check inflation data. Let me tell you that one more time. They want to change the way that they measure inflation. Take a look.
The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy.
Actionable, what did he say? Let's go back.
And perhaps most important, actionable information on the state of our economy.
Actionable information. What does that mean? Well, I'll tell you what I heard in that whole little message. All those big words really just means that they're going to be cooking the books. That's what I heard. They're going to be changing the way that they measure data to make it look better than what it really is. So guess what? They could do what? Cut interest rates. But if you know anything about the stock market and what the president wants to do, he wants to cut interest rates. That's why they got Kevin Warsh in. And even last week, the president said he needs to cut interest rates in the middle of inflation going rampant. In the middle of war, they want to cut interest rates. Does that make any sense? I mean, I don't know, man. MAGA, relax. Relax, MAGA. Don't come for me. I'm just stating the facts here, dude. I'm stating the facts. Don't come for me. Thank you. Appreciate it. Not only that, Kevin Warsh also said, at the previous Federal Reserve meeting, Jerome Powell, he kept saying that they want to get to the goal of 2.0% inflation. That was one of the biggest goals. But with Kevin Warsh, he wants to lower down that target to 2.9%. He said that he cares more about the left of the decimal point rather than the right. So it could be 2.9% or 2.5%, but the goal is just to get to that 2 on the left.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is, what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
So they're going to be changing the way that they measure data so that they could cook the books, so they could get that 2.9%. And then they'll be able to cut interest rates. So I'm saying all this to say, hey, stocks are dropping, so you should probably buy stocks because they're going to be getting ready to cut interest rates. And what does cutting interest rates do with the stock market? When they cut interest rates, then the stock market tends to go up. If they're thinking about increasing interest rates, you would think that the stock market will be plummeting, but it's not. That's why it doesn't make sense. Let's take a look at the future Federal Reserve meetings, and yeah, you can look for yourself and see what the probabilities of them increasing interest rates in the next few months. So at the meeting that's coming up this week, there's a 38% chance to increase interest rates and a 62% chance to leave them unchanged. Back in January, before this war happened, they were talking about cutting interest rates about 2 to 3 times this year. What a difference, right? Now they're talking about increasing interest rates. What's going on? Let's go further. This part gets even more insane to see because at the September meeting, there's an 80% chance that they'll be increasing interest rates. 80% chance. Wait till the president sees this, bro. But to put it in more detail, there's a 54% chance that they'll increase rates by 0.25% and a 26% chance that they'll increase it by 0.5%. Things have changed drastically. And the stock market isn't even reacting to this path of rates, which I'm a little worried about because they're relying too much on what the president's tweeting. They're not even looking at the reality of this whole situation. It's really similar to what went on during 2022. Do you remember those years during the Russia and Ukraine war? Do you remember when that started? Oil went like crazy. Oil went crazy, and that increased inflation to almost 9% over the course of the few months. And then they had to increase rates every quarter. It's real similar, it's what I'm saying. And stocks were plummeting. Stocks in the course of the year or two, the S&P dropped almost 40%. It gets worse. It gets worse at every single meeting because at the meeting in October, those chances of increasing rates goes up to 86%. Of course, this is all perception, but the market's not even pricing in the rate hikes. It's not even pricing it in. It's what dropped, maybe a couple percentage points. And what makes it even worse, they're not even talking about cutting rates until late next year. And it's like, what, a 1% chance. Of course, it's all perception. Things can change, of course, as it did this year. But as of right now, it's not even in the picture. We'll see what happens with Kevin Warsh. Maybe he could pull some strings here and there so they could maybe even cut rates later. Probably not going to happen. But I'm very curious on what he's going to talk about this week. I'll keep you posted, so stay tuned for that video. It's going to get interesting.